All right, folks, we are recording. All right, so it is Thursday, 5:15 p.m. Prices of Bitcoin are currently at 62.54. Okay, so let's recap on the day and see what we've seen from the small time frames to the large. Okay, first things first, what we've seen is this ascending trend line right here. Okay, now one thing that makes me happy is the trend line is breached right here. But remember that these trend lines right here, because they're dynamic, if you will, they're essentially trying to, say that if you're bullish, you're supposed to bounce off this trend line and, start taking off, right? But remember that markets sometimes, they'll just go sideways for a little while like this and then push back up, right? So that's one thing that I'm aware of, okay? Just because we've breached the trend line doesn't mean we're bearish again. Once you breach the trend line, we must break horizontal levels like this, because these are static levels, right? And this is a 6181 level, because that was from this 5-minute candle right here. This is a 6,102 level right here. That's from a 5-minute candle before this big push up. So these two levels, at least for now, are kind of important that we need to crack below. Okay, that's on the 5-minute time frame. Now, if we start dialing out, right, let's just say on the 4-hour, okay, one thing you can see is, first of all, increasing candle spread right here and increasing volume right here. Okay, so this is a very positive sign in terms of bullish pressure. Okay, however, if you look at these check marks, okay, remember, if we go back to the game of understanding, bots and algos are essentially looking for liquidity wherever they can. So if we go back to that kind of understanding, we realize that the stops for shorts above this area, the stops for shorts above this area, and this area have all been cleared now, okay, up here, all right? So that tells us that, okay, well, maybe there's not too much to expose in terms of short stops unless you get all the way up here. And if we're getting that far, I mean, then we're talking about a whole different ball game in terms of bullish pressure. But until then, we've done enough damage to the shorts right here by stopping out everyone with these check marks with this price action, where we can say with at least some solid evidence that, okay, it looks like we've done enough damage to the shorts. We've cleaned up a lot of excess shorts, and now we can potentially head back down. Now, if we're heading back down, the same goes for the longs, right? The long stops reside here. The long stops reside here, as well as here, okay? So if we're looking at it from, again, strictly from the standpoint of liquidity hunting, okay, we should be heading back down towards these areas right here. First one being around $4,900, next one being around $4,200, $4,300, and then the final one being around $3,500 or so, okay? On top of that, okay, here's another way to look at the market. All right, so let me turn this into a, well, actually, let's turn it into a 3-day chart. Okay, and then let's turn on the VPVR right there. Okay, so if you look back all the way into 2018, all right, this particular bottom right here, this particular bottom is very, very important. Very important, okay? Why? Because it holds a significant amount of volume that took place right here. All this bottom action right here, all in 2018 before this drop off, all that action took place right there. Even a good amount of volume as well as action took place right at the bottom of this area in 2019 bottom before we pushed up. And so now we're hitting that same area, on a daily time frame, right? With the POC, which is the red line right there, as well as the high volume node, which is that black bar poking out. What that essentially says is there was a lot of volume transacted. And once you get above this area and you hold, that means that the bulls are pretty strong and they've essentially pushed through the bearish pressure that resides here, okay? That's essentially what that means. Now, if we start pushing down, that means we flipped a key area, which is this $6,400 marker, as resistance right here. And we can, at the very least, start talking about these targets, okay? And at the very most, we can then start talking about lower lows, which are things that I've talked about before, the $3,100 low, okay? So remember, $3,100 that we put in 2018. That's the first target that we can talk about if we start, looking for lower lows. And then beyond that, I think on a daily time frame, I had stated that as per pivots, 2,900 and then 2,400 are the respective pivots that are below us. Okay, so those are the things that are sort of pressing in terms of support levels below us. Okay, now where exactly am I wrong? Right, so I'm wrong if prices continually keep pushing up higher up here around 6465. Obviously, I would hope, excuse me, I would hope that prices get shut down right here. But remember that, again, in markets, it's really not necessary that once you hit a specific marker, you get sent down. There's a lot of sort of inner workings that are taking place right here. Traders going from long to short, maybe some going from short to long, anticipating a breakout. Maybe some people who are essentially helping keep up the market here, maybe to fill up on shorts. All kinds of sort of liquidity engineering could be going on, markets being held up, etc. Okay, we don't really know. What we do know is when we start looking at technicals, which is basically the simplest language of the market, we can say that what we really need is a strong close below this marker right here, 62.33, which is this marker right here. Until we get that, right, clearly the bulls maintain strength, okay? It's, kind of obvious, right? It's hard to deny that the bulls are putting on the pressure on the bears right here, okay? And the bears really need to come out of the woods and really just, start taking a stab at price and start selling or shorting, okay? If we look at this platform right here, I think one of our members, Inception, put up, I don't quite look at this data as much, but I just follow EXO essentially, and that gives me a pretty decent picture. But, even over here, if you start looking, right, traders are, at least for now, starting to pick up and be a little bit more short, okay? I don't know what just happened here, but I guess this is just the last 5 minutes, okay? If we start going back to, say, the 1 hour, the 4 hour, okay, so now we're about equal right here, right, across the board, okay? But just on the last 5 minutes or so, you can see sort of the power, shifting a little bit, okay? Overall, over here, 53%, and because this is, again, spot, right, derivative, I give a little bit more weight to exchanges like Binance and Coinbase Pro and Bitstamp because they're directly transacting spot volume, okay? And now I guess, Binance is kind of in the middle because they're also derivative. But again, in these cases, this is pretty much an overall balanced volume, right, in terms of longs and shorts. Now, what I'd like to see is a power shift head towards the shorts, at least, sooner rather than later. For now, this is, to me, pretty much break even. Every, 5-minute interval, we're changing, back and forth, and we start going back on the 4 hour right here. This is where you get a clearer picture of, okay, overall, it looks like things are fairly well balanced, okay? What you really want to see is that power shift from, longs to shorts. And on top of that, what we really want to see also is we want to see OI right here dropping off, price positive delta dropping off, and some trapped buyers up here. That would be the perfect case and the perfect scenario for more potential downside. I don't like seeing bottoms like this where, it's 11 million, then it's a big sell with 31 million, and then again absorbed with plus 12 million right here. This, to me, says that, okay, there's still some bulls left in the market. They're willing to sort of hold up the market, and they're kind of creating this rounded movement right here, And more often than not, once you start seeing those rounded movements, you got to be a little bit more careful, Overall, I do believe that the volume is dropping off, so that's a positive sign. But you really want to see the sellers come in. This is really not a spot to be playing around and playing games, okay? Because, chances are if we break up from here, it might be a pretty clean slice all the way up to maybe this marker right here. Where is it? Let me see here. Where is it? I'm trying to figure out what the yearly open is. I think it's 7,165 or something. So what I'm trying to say is, if we start playing games around this area, we might actually slice up all the way to 7,165. That's actually the yearly open, okay? And also, if you turn on pivots right here, right? So if we turn this on, turn it to a 4-hour, you can see we've already broken above the pivot, right? So this is a very positive sign. This is why bears really need to step up soon and fast, okay? And if we are to push higher, we can get all the way up to R1, okay? It doesn't mean we have to, but the ceiling is, pretty much open all the way up to R1, or at least 7,165, which is the yearly open, all right? So that's why we need to be a little bit more careful, in this particular area. Now, like I suggested in the Bitcoin analysis channel, if you feel like in this particular case, you don't feel comfortable or confident in the short, I would say just get out of it. It's okay to get out of it because, like I've said before, I've been sizing down my short positions, and any position for that matter, quite a bit. My stop is pretty deep because I sized down, okay? And I'm okay kind of having these deep stops because I know that they're placed at specific invalidation levels. Again, these are slightly riskier trades, but based on what I've told you in terms of technicals, the high volume node, the 2-day chart, where we're essentially meeting price at a key high volume node right here, as well as the POC, it makes me feel confident that, okay, as per technicals, this is statistically the good trade to take. Now, I could be totally wrong. Listen, this might just blow through it by tomorrow, right? But again, what am I going to do? Okay, do I have, the understanding and of knowing that we will break through this, especially after we've run up. Let me see. We've ran up from the low today, 52.60, to the high, 63.87. So about $1,100 we ran up, right? So if we ran up about $1,100, do I say that, hey, I'm going to long this thing right at resistance? Not really, right? At the very least, I can, go to bed at night feeling a little bit more confident that, okay, I shorted resistance. I shorted a $1,100 move, all right? And I'm shorting with the fact of knowing that, people might be FOMO longing here, right? Those are the things that I have in terms of my credibility for this short. Now, again, like I said, I could be totally wrong. We could blow through this. But again, if you're following technicals, these are the risks that you have to take sometimes in the markets, Now, if we start looking at S&P 500, we kind of closed just, basically like a doji right here. Maybe like 1.2% or so from the open. So, but a whole lot of action actually went down, in today's candle, right? I mean, it went down and then up all the way and pulled back a little bit, pushed up a little bit, and now we're coming back again, right? If we start looking at this on a smaller time frame, we're actually sitting on kind of like a key level, the 2402 marker, which comes from this key low right here. Okay, so if the bulls really want to stay bullish, they need to push this price up from here. Okay, and if the bears start gaining strength, they're going to start pressing price, below this area and then below this area as well. Okay, these are the two key markers: 2402, 2367. Okay. XO chart wise, like I said, you really want to start seeing OI drop off. You really want to start seeing that, positive delta fade away. None of which is happening right now, but, I'm going to wait. I'm going to see how the daily closes. It's about 1.5 hours from now. So we'll see how it goes, folks. I know people are probably freaking out. We're pushing up higher from our short entry, but like I said, if you're not comfortable, cut out of the short. It's okay to just sit out and wait, right? For all I know, you might get a higher short entry, or you might get an opportunity for a long. Okay, but I'm going to wait it out. I'm going to see what the market is going to try to show me. Hopefully it starts showing me some weakness. Hopefully we start getting the technicals to be in favor of what we've been looking at right here, right? Hopefully we start selling off from here. Okay, but yeah, that's pretty much it. Any questions so far? From a TA standpoint, your take on the stock market development. I mean, I think Fassel pretty well covered it in his equities updates. I don't know if you guys read it, but basically what he talked about is he wants to see high growth um, and momentum stocks start to outperform. And I think one of the positives today was the IWM right here. Okay, this is where let's see here. IWM found support right in this key area right here, like this bottom right here. Let me pull this out. But again, it didn't find strength, right? It found support right here, okay? But what it needs to show you is some good strength, on a pop back up. Let's see how the daily candle closed, right? So you can see IWM closed a little bit better. And again, this is your small cap, index. This is what he's talking about, okay? For the most part, I mean, some of the stocks close on a positive day. Nothing to write home about because again, we're still in sort of a bearish momentum market. But we'll see exactly, how we fare in this market for the days ahead. Okay. Let me see here. So yeah, I mean, folks, though it does look scary, we are trading essentially the technicals, and if they don't work out, they don't work out. We're going to have losers in our way in this market. And I actually posted something, earlier on in the day, which was about, sometimes the markets make you sort of feel inadequate. I think Peter Brandt posted it. I forgot exactly where it was. It was like sometime earlier on in the day. Let me see here. It was a really good post and a tweet by Peter Brandt. Find it. Anyway, I'll show it to you. I'll share it with you guys later. But for the most part, the markets will make you feel stupid on a lot of days. Okay, there's going to be a lot of days where the trades just don't work out. You're going to make mistakes. Your technicals are going to go against you. The market is going to do all kinds of erratic things. But these are the things that will keep happening in the markets over and over again if you don't quite manage your risk properly. And if you piss away your capital, you'll never live to fight another day, right? So what you really need to do is understand, even if I'm wrong in this particular trade, how much am I losing? That's a question you need to ask yourself. And if you're willing to lose that money based on the technicals that you're seeing, based on all the surrounding evidence, then I think it's okay. That is a sunk cost in the market for playing the game. All right, that's a sunk cost, or what do they call it? Opportunity cost for playing the game, right? And that's just a fact of life, especially in markets. Okay, so I know the trade obviously right now that we're in, the short trade does not look that great. But again, I do urge you that if you don't feel comfortable, just cut it. Just cut it, sit out, wait. Okay. But yeah, I think other than that, I mean, we've been looking at these statistics. We've been looking at Excel. All things are kind of pointing to the fact that, hey, maybe, we need to start slowing down after this $1,100 move. I don't know. I just don't know if we can just keep going at the pace that we're on. Let me see the rec indicator right here. Yeah, you see even over here, right? This, by the way, these green little dots right here, these are liquidations, right? These are short liquidations right here. So you can see maybe a majority of this move, you can say, I don't know, 60, 70% of this move was probably fueled by short liquidations or short covering, right? So it's not like there's like real volume going into this and there's real spot buying. It's probably just someone driving up the market to close out these idiots, who are consistently shorting or, heavy, 50x, 100x, whatever shorts, and they got liquidated and they got closed out. And so now it's like the time for the bears to really show that, okay, now that you've liquidated all the excess, we're going to really pressure the market down. That's what we need to see from the bears. And if we don't see it, we don't see it, right? But for the most part, this is what I'm banking on. Liquidations are done. We've stepped up right near the top to short, okay? So now we're hoping that the bears really start the selling right here after an $1,100 move. And on top of that, like I said, there's really no clarity if you start looking at external events in the stock market. GDP numbers are still looking grim, right? The coronavirus cases are getting worse and worse. We just don't know yet if, like Faisal said, we just don't know if the virus is fully priced into the markets, okay? And even US oil right here today, right, popped up a little bit, right? You could see, I mean, we made a nice move. This is probably based on the fact that there was some news that there's going to be some bailouts for the oil industry coming from the U.S. and potentially, resolving the issue between Saudi Arabia and Russia. So, you can see external events starting to move the prices on a couple of these assets, okay? But is it going to be enough? Are we still going to continue the trend? That remains to be seen, right? Because for now, you can just make the argument that, well, for the most part, I mean, every sort of green rally that has been, sold off quite aggressively, right? So now we've kind of sustained, somewhat of a bottom here. Are we going to see Friday and maybe even next Monday to continue selling? So far it looks good, right? So yeah, I think that's pretty much it. And by the way, just so you guys know, in the 1929 Great Depression, I read that the stock market went down almost, I think 87% down. And then I think in 1937, the market went down almost like 57%. There's been plenty of events in the history of the stock market where the markets have sold off pretty aggressively without even, having a good consolidation. Okay, so it's not necessary that the markets have to consolidate now. We could go down another 10-15% and then consolidate below and then sell off some more. Because we've never seen sort of an exogenous event like, a virus essentially shutting down major parts of the economy, supply chain, and also forcing people to essentially not participate in the workforce, right? So this is a very unique case that the stock market has never dealt with. And for the most part, I don't believe that, when you start pricing in, a 30% drop so far, do you really think a 30% drop is going to, price in the data of, how much of the losses are going to be incurred in terms of businesses, in terms of lost GDP, in terms of, lost growth and earnings for companies in multiple quarters? I don't know. I just don't see it. But again, it could be kind of a risky thing where I'm, essentially shorting now, right? Like I said, we're taking smaller bets in the market, but we're also shorting the technicals of quote unquote shorting the top, if you will, All right. 9/11 was another, crazy exogenous event where we couldn't foresee what was going to happen in the markets, and the market sold off quite a bit, So yeah, so many people are losing their jobs. When do we say we are in recession, or are we already in recession? So I think Morgan Stanley and recently Bank of America, if you read up on their news, I think they started essentially, throwing out warning signs that we are essentially in recession territory now. Okay, so it's not like recession is some far out event, like 2 months from now or 3 months. I think we're actually in a recession now. I mean, GDP numbers for Q1, which is this quarter, or actually, I'm sorry, it's Q2. I think they're supposed to be forecasted at -4%. Q3 is supposed to be -14%. Unemployment is supposed to climb up to almost -20%. Okay, so and this is by JP Morgan. Okay, so you guys could go source this. I'm not making up the numbers. I read this yesterday. So you can see analysts across the board are now starting to look at this picture and be like, shit, we could be in this for a little while, maybe a few months, maybe a few quarters, So it's not going to be a quick fix. This isn't like a quick Band-Aid fix. And also on top of that, what you really see in the equity markets, in US oil, in gold as well, is everyone is looking to get out of their trades and their investments, because remember, cash is king. Dollar especially is king. right? Look at the dollar just skyrocketing right here. This means, right, if you look at my chart from yesterday, this means that everyone, or not everyone, but rather a majority of people are looking at this market and they're saying that, hey, we need to get out and, potentially get into the dollar. And I think I put this up yesterday somewhere over here. Let me see here. Right there. Okay, if you look on the Cryptosomniac Twitter right here, okay, the DXY was up, S&P 500 was down yesterday, US 10-year Treasury notes, okay, those are the bonds, right, which are by far the safest bonds in the world, okay, US oil and gold, they were all down yesterday and the dollar was up, okay. Even today, the dollar is up, right? That means that people across the board, all across the world, especially in America, are looking to get into the dollar, the US dollar, because that is the true safe haven, okay? It ain't gold, it ain't silver right now, it's not oil, and it's not investments, all right? So yeah, look at the dollar, look at it going up, and look at all the other investments, falling to the wayside, right? That tells you what's happening, behind the scenes internally, okay? The euro will be in trouble, Peter says, and so many economies will be in trouble. Yeah, definitely. I mean, I think, a lot of economies across the world, and so I'm in Colombia right now, right? And I think Colombia is already starting to talk about recession, right? If you start looking at, I put up this post earlier. We took 3 trades so far since the last week and a half. I took the dollar COP, which is the Colombian peso, dollar ZAR, and dollar yen. All 3 hit our long targets. And the reason I'm longing these is because I'm essentially betting with the fact that the dollar is going to get stronger versus these somewhat weaker economies and weaker currencies. Okay, number 1 being Japan. Okay, number 2 being South Africa, the rand. Right, the rand is obviously taken off. I set my targets, I think, right around here. Obviously, it blasted through that even further. But point is, things look good, right? I took some profit in a healthy manner, and now if we look at the COP, right there, even that, it's taken off over the last several days. Okay, so what this tells me is, the dollar is the most favored currency right now, and everyone wants the dollar. All right, and if everyone wants a dollar and people don't want to be in investments, it's really going to be hard to sort of keep up these markets, right? Because if there's really no buyers to buy and the sellers are selling to get into the dollars, that just means that there's more supply than demand and prices are going to go down, okay? When do you commence Forex training? I need to learn the fast track. So first, I would definitely recommend you guys to go to Baby Pips. That's number 1, all right? And then, April, folks, for the most part, it's going to be just a relaxing, getting yourself used to the new markets we're opening up. I'm not just going to go into April and just say, hey, guys, we're trading this, This is more so just like a marketing pitch, me showing people, here's, how I've been trading Forex markets. Just because I don't post my Forex trades doesn't mean I don't trade them. I just don't feel the need to post my Forex trades because not a lot of people trade it. And on top of that, I think it's a very risky market. You'll probably lose money much faster and harder than you will in the crypto market, in the Forex market, okay? So, that's why I'm a little bit careful. And once we start opening up those channels, definitely going to be, a learning curve, right? It's probably going to be like a good month and a half. Forex markets are open, they're like a 5 trillion a day volume market, folks. They're not going anywhere, So we're gonna have plenty of time to learn those markets, and we'll show you guys exactly which pairs I prefer to trade, how we look at different sets of data, and what analytics we can pick up to put on our trades, what platforms, etc. All right. Okay. Crypto Lifestyle asked, I feel like cash is king, but the US dollar is king, but I think there are power that wants to change. So is gold, cash, BTC. What would your stack, your bulk of money be in? I'm truly vexed. So right now, I'm literally just sitting in cash. Like majority of my equities money and my crypto money, I think I showed you guys a few days back. I told you guys right here, long-term, February 12th, we pretty much sold the top and I got out. I didn't even look back. That was basically like right here. If you look right here, right around this top right here, I got out of all my long-term positions because I think people are just getting a bit too bullish for my taste in the market. And equities-wise, I think I sold multiple times, and I let members know. I sold, where was it? First, I sold a little bit right there, and then I sold most of it right there on this bounce right here, okay? So right at the beginning of March. So for the most part, I've just been in cash. But then, I have my BTC just sitting on Bybit. I have, some cash deployed on Coinbase Pro, which again, I'm waiting, just to be able to buy back in whenever I feel the bottom is in, if, whenever the bottom does come in. So, yeah, I think that's pretty much it. I think it covered a lot, right? Covered oil, S&P 500, covered the fundamentals that are impacting the markets, covered BTC and our short positioning and our reasoning behind it. So I think this video should be helpful for you guys. And again, please be careful in this market, folks. It is quite dangerous to trade in bear markets. And, to be honest, we are in a bear market. Like, don't let anyone tell you otherwise. All we're really doing is we're probably in the middle of a cycle, maybe consolidation, but we're definitely in a bear market. And we're, like Morgan Stanley and Bank of America said, we're definitely in the midst of a recession, okay? So just prepare yourself, brace yourself for the impact that lies ahead, whether it's your job, your family, your business, and your investments, okay? But I'm here for you guys whenever you want to talk. If you ever want to set up a one-on-one with me, I have deep, immersive, and interactive one-on-one sessions where we can share screens. I can show you guys, different strategies, how to essentially, maybe hedge your bets in different markets, maybe how to, learn how to, trade Forex or whatever you need. I'm here for you. And I'm here to do these videos just for, keeping you guys updated. Okay. So thank you so much, folks. Again, have a wonderful evening, and I'll keep you all updated on our trade. All right. Cheers.